What's up guys, and welcome to Drive to Thrive. In today's video we'll be taking a look at Apple and seeing what this stock has been doing. So hold on to your shorts, hold on to your pants, and let's get going. Hold your pants, hold your shorts. It's like the first thing that popped in my mind. A little bit of an odd intro. Alright, so let's get started on the weekly chart, because I think this chart is super important for you guys to kind of see the whole greater picture of Apple and how important this 200-day moving average is. So currently on my screen you see this blue line here, and this is that 200-day moving average, which really represents whether the stock is bullish or bearish here. And so let's go back to about like 2018 here of May and even further out, but you can see that once we kind of broke beneath this 200-day moving average, you know, there was a little trap right here, and then we bounced around and eventually ended up using it as support once, support again second time. Then this is the COVID dip again, a little bit of trap right here, and then bam, straight up, you know, used it, came close just over here in March of 2021, and then haven't really approached it until here in March of 2022. Again, managed to bounce above it, and then look at this. As soon as we broke beneath here, we ended up using as kind of a little bit of a resistance here from the bottom side, just kind of testing it. And so a lot of bears probably jumped on here. This was the signal, you know, that this is bearish, because once you start hitting that 200-day moving average from the bottom side, it's actually a very bearish sign. But guess what? After we had this rally here in June and into July, we passed right through this 200-day moving average, and we find ourselves again right in this sweet spot. So where do we go from here? Do we manage to bounce off of here and possibly start to take out those all-time highs into 180s and then eventually into the 200s? Or do we just sell off here next week? Maybe some more FUD, maybe some more bad news coming out of JPOW, out of this recession. And so again, in my opinion, I think the second scenario is more likely. The stock market is very bearish as of late, very bearish. So I wouldn't be surprised to find ourselves go all the way down to this $138 support, and possibly as low as this $130 to test those previous lows. Now, if we can manage to find support in this area, this is definitely where you want to start loading up, and let's aim for the moon here. Now, if we end up breaking this $130 support, then honestly, a next major support that I see is down around that $120. Now, this line is highlighted in green because this is where I'm going to get more aggressive. You know, as we start breaking into the low 100s here, you definitely want to start taking advantage of Apple, because again, let's face it, Apple, I do believe, is going to be around for another 5 to 10 years. So any kind of major dip is a good buying opportunity. But as always, this isn't any kind of financial advice. You got to know how to spend your money and what to do. We're just here for entertainment and some ideas here. So anyways, once we end up breaking, you know, down into these 118s, I will start to get a little bit more aggressive. But I'd be lying to you if I didn't tell you that, you know, in some crazy universe, we don't end up pulling back all the way to this $80. Now, I know what you're thinking, Adrian, you're absolutely crazy. How can we go down into the 80s? That'd be a dip from, let's see, those all-time highs. If we measure those back here in December of 2021, and we dip all the way down to $80, that'd be like a 56% pullback. So let's go a little bit into the past here, and let's see if we got any kind of a major pullback like that back in the day. So the first dates that kind of pop into my mind is the 2008 crash. So let's kind of see what happened here. So in 2008, so this is December of 2007, let's see, we had the initial crash of around 40% right here. Then we bounced back up, recovered most of those losses, and then let's see, the second pullback was down to around 56%. So 56% pullback has happened in the past before. Now let's go a little bit further back. Let's go into the time when, I don't know, half of you probably weren't even born yet, but let's go into 2000s here. Now let's see, let's measure those again. We had that initial drop of around 40%, climbed back, recovered most of those losses, and then a second major pullback was around 78%. And if we measure down to here, yeah, it's all 78 to 79%. So again, if you think that we can't pull back 60% or even 70%, you are, I don't know, delusional, but I don't want to say that delusional because they're pretty mean. So if you think we can't pull back anywhere between 50 to 70%, then you're going to be shocked when it does actually happen. So how can we prepare for this kind of massive drawback? Let's go back to the current times now and let's kind of see what the MACD and what the stochastic RSI is doing. So again, remember in the two other scenarios I just showed you, there's always that initial pullback of around 40%, and then that second pullback is the big one. So guess what, we had our first major pullback here back in if we go to March of this year, you know, down to the lows, it was around 27%. Then we managed to climb back and recover pretty much all of them. So is this the big pullback here? So again, I will start to buy in around $119–120 because I think that's a great price. But I will be going heavy buying when we end up going all the way down to $80. Now, this won't happen within like a week or a month even. This might take us another 6 months, another year, especially if this recession starts getting some traction. We start seeing some worse numbers, you know, if the Fed is over tightening again and they throw us into some crazy recession and possibly even depression. This is where you can see those massive pullbacks of 60 to 80%. So again, any kind of investing you want to do right now, you don't want to go all in. You don't want to deploy all of your cash.Maybe keep that 25 to 30% on the side in case we do end up having that massive pullback on the NASDAQ, on S&P 500, which would mean that Apple, Microsoft, Tesla, you know, PayPal, you name it, all those companies are still going to fall down maybe another 40 to 50%. So just be prepared for that. Now, looking at the MACD here, we are still in this bearish momentum now. If you can see, we're rotating off of this zero line and actually starting to lose that momentum to the upside here. So that's pretty bearish. So that's a first warning sign. Second warning sign is this overextended stochastic, and we are still on the weekly chart. So again, check out all this room for us to come back down. So that is my second, you know, negative sign, and why I'm actually doing more bearish trades on Apple currently, especially some of those bear call spreads. Now, if you wanted to show you some examples, make sure to subscribe to this channel, leave me a comment, and follow me on Facebook, because this is where I kind of share more ideas before I even get to these videos on YouTube. So make sure to check out that Facebook page and all that other fun stuff. So that is it. Hopefully this helps you guys. If it did, give me a thumbs up. If you like these kind of videos, make sure to subscribe. Otherwise, thank you so much. Enjoy your weekend and the week ahead, and we'll see you in another video. Ciao.